got 14 billion in Bitcoin options are set to expire on Friday. Interesting because this is kind of a holiday week and weird, but we tend to see those expirations at least cause volatility. I think we're likely to stay pretty flat through the holiday. I don't know. So I think this is going to be one of those non-stories, to be honest. And then, of course, we got a little Microstrategy funds. Strategy tweeted if Bitcoin drops to our 74K average cost basis, we saw 5.9x assets to convertible debt, which we refer to as the Bitcoin rating of our debt. At 25K Bitcoin, it would be 2.0x. So I think he was just pointing out that like we don't have to sell and we're going to be fine no matter what happens. So shut up. But of course, people then jump in and being like, oh, he's coping.
Bitcoin just crossed from speculation into state strategy, and Texas has officially fired the first shot. Scott Melker, widely known as the Wolf of All Streets, delivers a detailed assessment of a pivotal moment in Bitcoin's developing relationship with U.S. state-level policy. With Bitcoin trading near $90,053, he highlights Texas' groundbreaking decision to purchase roughly $8.7 to $10 million worth of Bitcoin through BlackRock's IBIT ETF, an unprecedented step that establishes the nation's first state-backed strategic Bitcoin reserve. The move carries significance well beyond its dollar value. As one of the world's largest economic regions, Texas signals a shift that could prompt other states or emerging economies to follow, especially as global digital asset adoption accelerates. Melker notes that Bolivia's recent integration of crypto and stablecoins into its financial system reinforces this trend of nations leveraging digital infrastructure for efficiency and dollarized stability. The discussion expands to U.S. political momentum, including proposals allowing taxes to be paid in crypto, an idea highlighting how policymakers are exploring non-traditional methods of building national digital reserves. Melker also evaluates institutional behavior, emphasizing the growing recognition of Bitcoin as a macro asset class shaped by liquidity cycles rather than rigid four-year patterns. J.P. Morgan's actions, from tokenized deposits to Bitcoin-backed financial products, underscore this transition despite publicly cautious rhetoric. While institutional involvement strengthens market infrastructure, it also raises concerns about centralization. Melker concludes by addressing upcoming Bitcoin options expiries and Microstrategy's strong collateral position, portraying a market evolving rapidly under structural, political, and institutional forces. If moves like these shape the future of Bitcoin, the conversation is only getting started. Drop a comment, share your thoughts, and subscribe for more market-shifting insights.
The great state of Texas bought $10 million worth of Bitcoin, becoming the first state ever to actually purchase Bitcoin, in this case, IBIT, BlackRock's ETF, to actually purchase it and start a strategic Bitcoin reserve. Will more states and countries follow? After all, Texas is one of the largest economies on the planet. We've got that and a whole lot of other news today. First of all, I guess the big story of the day is the one that we have here in the title, is that Texas becomes first state to buy Bitcoin, investing $10 million into its strategic reserve. Of course, they bought IBIT, which is BlackRock's ETF. You can see the article here on Yahoo Finance. Of course, Bitcoiners are like so butthurt that it's not enough, that it's not Bitcoin spot, right? That they bought an ETF. Like, can't we just enjoy anything ever? Yeah, I like the precedent of them actually buying it. I haven't dug too deeply into where they got the money, whether it was budget neutral, as we keep talking about for the National Reserve. You know, obviously nobody wants to see like taxpayer money necessarily or a budget item open, but hopefully this will lead to other states. As I said in the intro, I think Texas is the fifth largest economy in the world, right? If it was its own country, it would be the fifth largest economy in the world. So this is actually bigger news than if 99% of the countries in the world started their own strategic Bitcoin reserve. You mentioned this Bolivia news we've got here, breaking Bolivia to integrate Bitcoin and crypto into its financial system, starting with stablecoins. So it's somewhat vague here, but I think just another data point along the lines of what we're talking about here. So we know that everybody's going to be using stablecoins. What that means for Bitcoin itself, I don't know, but especially in, countries in Latin America, countries in Africa, it's going to make a hell of a lot of sense to just denominate things in dollars, use stable coins and these rails and move forward. This is the natural progression of things. We had Warren Davidson proposing legislation recently for Americans to be able to pay their taxes in crypto, and that money would become the strategic Bitcoin reserve or digital asset stockpile. I have doubts that that would happen. I also have doubts that someone's going to actually use their Bitcoin to pay their taxes. But at least we're, even in the United States, we're getting novel ideas for how to accumulate it outside of just, stealing it from bad actors all over the world. It seems to be that we're really going to do it.
Yeah.
Just go take it. But JP Morgan crypto is emerging as a tradable macro asset class. Crypto is moving away from resembling a venture capital style ecosystem to a typical tradable macro asset class supported by institutional liquidity rather than retail speculation. They basically just show our market cap rising over here. But the idea here is that the halving and 4-year cycles matter much less now than global liquidity cycles and everything that's happening in macro. So listen, I mean, we always get JP Morgan says, this is probably some dude at JP Morgan, right? But what do you make of the idea that the cycles are dead, that this kind of is just becoming another asset class in the macro? I guess that's a more bearish way of stating it, but I think that's probably a positive thing. Well, we can see what they're doing, and JP Morgan has filed to launch a bond backed by Bitcoin. So basically, they're trying to go and steal the Sailor playbook, right? We've seen all this controversy even this week that they've been increasing margin requirements on Microstrategy stock, which caused a sell-off. That maybe Max Kaiser says, I doubt this, they're like massively short themselves on the stock. Have no idea. But this is from Jeff Park, it's happening. JP Morgan files new Bitcoin note offering 1.5x through BlackRock's IBIT. This is very similar to exactly what Michael Saylor and Strategy are doing with Bitcoin. Once again, JP Morgan, I just don't think is your friend. You have to take everything that comes out as research as a grain of salt, because it's not like Jamie Dimon is sitting there writing research reports on how they view. But if you're watching what they've done over the years, as much as they've been dismissive publicly about it, and he has called it, a scam and all these things, I mean, they were one of the first to send a tokenized bank deposit. They have JP Morgan coin, which they've been using for a long time. They're now creating MicroStrategy products. They said 2 or 3 weeks ago, they're going to start taking Bitcoin and Ethereum as collateral. So regardless of like Jamie Dimon's emotional thoughts on this or whatever, they're full in, like as any institution, and like on the fringes of all the things that are being pushed. To me, that is bullish in that it will help build the services, but very bearish in that, like, if you have a skepticism towards JP Morgan, it's probably so that they can do it and control it.
Crypto markets may be cooling, but the moves happening behind the scenes reveal a new wave of conviction from institutions, innovators, and market disruptors. Scott Melker reveals that Cathie Wood has intensified her exposure to the crypto equity sector, deploying more than $93 million in a single day as part of ARK Invest's broader strategy to accumulate during periods of market weakness. Her recent purchases, spanning Circle, Coinbase, Bullish, and Block, signal conviction that key crypto-linked companies may be forming long-term valuation floors after steep November declines. Melker underscores how this aggressive positioning aligns with historical patterns in which ARK builds into downturns, especially when institutional interest in digital assets is accelerating beneath the surface. He also draws attention to legacy examples such as EOS, whose multi-billion-dollar ICO produced one of the most unusual outcomes in crypto: minimal on-chain activity but massive retained Bitcoin reserves that later financed new ventures. Melker further reveals that structural shifts are unfolding through the rise of prediction markets. Robinhood's plan to launch a derivatives exchange and the CFTC's approval of Polymarket for intermediated U.S. trading mark a turning point toward mainstream financial integration. These developments highlight the growing intersection of crypto rails, leverage, and data-driven forecasting. Meanwhile, Bitcoin enters the week with $14 billion in options nearing expiration, yet Melker expects holiday-driven flat trading. He concludes with MicroStrategy's reaffirmation of strong collateralization, reinforcing stability amid market noise. Let's get back to the interview.
So the next news we have, and we haven't actually done the what is Cathie Wood buying and selling thing in a while. She is a local resident of Tampa Bay, much like us, so we should talk about her more often. But this is a list basically of all the things that she's been buying. But I'll give you a hint, is that they spent almost $100 million this week buying Circle, Coinbase, Bullish. There's another one. It was Circle, Coinbase, Bullish, and Block. So 4 of the bigger name crypto adjacent companies and sizable purchases across the board. So obviously she believes that these are approaching a bottom. We kind of saw a bubble on a lot of these, not necessarily coin, but like Bullish had a huge IPO, came all the way down. So I'm assuming that she's interested in it now. Listen, she hasn't been the most successful of managers over the past few years, but has a long track record of extreme success and definitely still worth watching. Yeah, Bullish is the best because it was basically funded by EOS, which was the greatest IPO of all time that never did anything but buy a lot of Bitcoin.
Oh,
And
wow.
everyone
I
thought
did not
Bullish.
know that. Yeah, EOS.
Yeah,
They actually got delisted from Coinbase a couple weeks ago.
I mean, it's the most it's got to be the most prototypical example, if you look at it, of all the glaring problems the crypto has had over the years. It's just wild. So they basically raised, I've seen 4 to 6 billion, however many billions. It was the biggest ICO of all time, obviously. They raised that money, effectively built a ghost chain that nobody ever used, somehow converted all that money they raised into Bitcoin. So Block One is the company behind it, still owns 140,000 or 160,000 Bitcoin, some absurd number, and then funded some of these other ventures. But there's a perfect example of, in crypto, at least in the past, you could launch something, become a billionaire yourself. Your company could be worth billions and you can never build anything. Last I checked, Bezos and Musk had to actually build it something before becoming billionaires. So now we got to move on to prediction markets. And I think you're probably well more equipped to talk about this than me. Robinhood to launch new derivatives exchange for prediction markets push. Interestingly, this is with Susquehanna and Ledger X, which was the FTX adjacent exchange. But derivatives, so to my understanding, this is derivatives, which means leverage on prediction markets. So they're taking the crypto and leverage side. They'll be able to do crypto leverage and such as well, but all of that on prediction markets. And this, of course, and I think they have a deal with Kalshi, but they've said that, as crypto was to Robinhood in the past, their hyper growth and became a huge part of their business. That's how they view prediction markets moving forward, that'll be the next thing. And at the same time, we finally have Shane Copeland here saying today, Polymarket US is approved by the CFTC for intermediated trading, aka letting people trade Polymarket through their brokerages, a key milestone for permeating the US financial system. So now Polymarket will be available in the United States. But that's interesting. Does that mean you're going to go to E-Trade and Schwab to do Polymarket?
Yeah.
Is that are we going to do Polymarket through exchanges instead of on Polymarket? I'm very confused by this. I think the predictive markets thing is really interesting and powerful because you have sharps spending money to make a bet on something, which probably gives you better information on a likely outcome. They're correct on elections and things like that because, you more accurate than exit polling and things like that. But do I think that everybody should be gambling on everything all the time? No. Somebody here says trading is gambling, Scott. Come on. Yes, I agree. I don't think people should be trading. That's why my content is now about investing and dollar cost averaging. If you're trading and you're good at it, great. But I don't think everything in the world should be a trade. Let me bring it up. We've got 14 billion in Bitcoin options are set to expire on Friday. Interesting because this is kind of a holiday week and weird, but we tend to see those expirations at least cause volatility. I think we're likely to stay pretty flat through the holiday. I don't know. So I think this is going to be one of those non-stories, to be honest. And then, of course, we got a little Microstrategy funds. Strategy tweeted, if Bitcoin drops to our 74K average cost basis, we saw 5.9x assets to convertible debt, which we refer to as the Bitcoin rating of our debt. At 25K Bitcoin, it would be 2.0x. So I think he was just pointing out that we don't have to sell and we're going to be fine no matter what happens. So shut up. But of course, people would end up being like, oh, he's coping.
Texas' strategic Bitcoin purchase and Cathie Wood's aggressive accumulation of crypto-linked equities underscore a broader institutional and governmental shift toward digital assets as legitimate components of both portfolios and reserves. The combination of state-level adoption, high-profile investment strategies, and legacy crypto narratives such as EOS illustrates how capital is increasingly flowing into Bitcoin and its ecosystem, not merely as a speculative play but as a recognized store of value and macro asset. The emergence of prediction markets, including Robinhood's derivatives exchange and Polymarket's US integration, further signals the maturation of crypto infrastructure into mainstream financial channels. Short-term events, like the $14 billion in Bitcoin options nearing expiration, appear unlikely to disrupt momentum, particularly with firms like Microstrategy maintaining robust collateralization. Overall, These developments reflect a market gradually balancing volatility with structural and institutional support, strengthening Bitcoin's position within global finance. Could more states and institutions follow Texas' lead and reshape Bitcoin's role in global finance? With Bitcoin gaining ground through institutional adoption and strategic state moves, join the conversation. Drop a comment, share your insights, and subscribe for the latest crypto analysis.